Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and welcome to episode 15 of my Dow analysis series in which we will be analyzing every single company in the Dow. So in this video, we're going to be analyzing the 14th smallest company in the Dow by market cap, which is Nike Inc., ticker symbol NKE. This is one I definitely don't have as much prior knowledge about. But fortunately, their business is fairly straightforward compared to some other companies. So I think it'll be a pretty exciting video. If you find value in my videos, make sure to like and subscribe so you don't miss out on future content. This is Frank Mularcik. So first of all, we're going to be looking at their 2021 10K annual report, and Nike's fiscal years are a little bit wonky. So their fiscal year basically goes from June 1st to May 31st. So 2022, fiscal year 2022 recently ended on May 31st of 2022, but their 10K report for 2022 probably won't be out until around August, beginning of August sometime. So right now we're looking at the 2021 report here, which is, about a year old at this point. So the first thing we want to look at is kind of their business model and what products they do sell. So they have the Nike brand, obviously, which is focused in 6 key categories, which are running, Nike basketball, the Jordan brand, football or soccer, and then training and sportswear. And they kind of align their product creation into the basic categories of men's, women's, and kids, which I think makes sense. And then they also have sports apparel, covering the those categories. They also have equipment and accessories under the brand name, including bags, socks, sports balls, eyewear, timepieces, digital devices, bats, gloves, protective equipment. So they have their shoes, and they have apparel, and they have equipment, which are kind of their main revenue sources, I guess. And then they also have the Jordan brand, and then they have, which I didn't know this, I guess, until reading this, they own Converse, which has some brands under it. Obviously, mostly just shoes there, but they own Converse, Chuck Taylor, All Star, One Star, Star Chevron, and Jack Purcell. So I think at this point, Converse is about 5% of overall revenue for Nike, whereas the rest of the Nike brand is maybe 95%, but it's still a good little asset to have, and it does help the business in general. And then they do have some consumer services and experiences through digital platforms like fitness and activity apps, and stuff like that. So that's at this point not really a major portion of their business either, but it's certainly an area where there could be some more growth. And to get a sense of where they are in the world, basically sales in the US accounted for about 39% of total revenues in 2021, and that leaves about 61% of total revenues being from non-US sales. So now that we have an idea of Nike's business and how they make money and where they make money, we can look at their most recent earnings report, which was from Q4 of fiscal year 2022. So that was released sometime in June, I think. So revenues decreased in the fourth quarter 1% to 12.12 billion compared to the prior year. So revenues for the Nike brand were about 11.7 billion, and revenues for Converse were about 593 million. So again, like I said, Converse about 5% of revenues, whereas the rest of the Nike brand is about 95% of revenues. And if we look at earnings, net income was $1.4 billion, down about 5%, and earnings per share was 90 cents, down about 3% compared to the prior year. And they list some, expenses here that really affected that. So some major expenses that were increased in the fourth quarter compared to the prior year were freight and logistics expenses, which makes sense with increased gas prices and oil prices, and then also increased marketing prices as well, or marketing expenses, not necessarily prices, but marketing expenses and some other overhead stuff increased as well, which kind of led to a little bit of lower earnings and net income. And if we actually go back up towards the top of the earnings report, they do talk about a share repurchase program. So they authorized a 4-year, $18 billion program to repurchase shares of common stock. And I think that's pretty good. If we look at their shares outstanding history, this goes back to 2009. So they have a pretty strong history of decreasing their shares. So back in 2009, they had almost 2 billion shares, and now they have around 1.5 billion. So that's a pretty substantial decrease over the matter of 13 years though. There since 2019, it's been a little bit stagnant, actually a little bit of an increase in shares outstanding, but it's good to see that as they kind of come out of the woods of the COVID pandemic, they kind of are letting shareholders know that they are still committed to repurchasing those shares, and that that's going to happen, and they have a plan moving forward to make that happen. So I think that's definitely a good thing for current shareholders or investors who want to become shareholders. So now looking at the full fiscal year of 2022, they had revenues of $46.7 billion, which was up 5% year over year. And there's a few things I thought were interesting here. Their Nike direct revenues were $18.7 billion, which is up 14% year over year. And that is a good thing because those are, revenues that they are selling directly to the consumer. There's no middleman there. So some of those are online sales with Nike brand digital growth, which was about 18%. And then also, Nike owned stores where it's basically a just Nike store. Those sales were up 10%. So that's definitely a good sign because they're able to sell directly to consumers and not have to worry about anything in between, and potentially offer better prices to the consumers and make more profits from those sales as well. And then looking at Converse, revenues for Converse were about $2.3 billion, which is up 6% year over year. And then if we look down here at earnings, net income was $6 billion, which is up 6% year over year. And earnings per share were $3.75, which is up 5% year over year. And in terms of dividends and share repurchases in 2022, they returned about $1.8 billion to shareholders through the form of dividends, which is 12% higher than the prior year. And then they repurchased about $4 billion worth of shares in 2022, which is about 27.3 million shares that they repurchased. So definitely good to see that they are returning some capital to shareholders. And overall, they're have some steady revenue growth, steady earnings growth, and they are returning capital to shareholders. So there's really not much more I could ask for. And looking now at the balance sheet, current assets are around $28 billion as of the May 31st, 2022, which is up about 7% from May 31st, 2021. I really like that they have this percent change column here. That's really helpful. So some of the major changes in that year time frame was about 13% reduction in cash and cash equivalents. And then they had about 23% growth in their short-term investments and inventories. Comparing that to current liabilities are only $10.7 billion. So that gives them a current ratio of close to 3, which is really awesome to see. That means they have, more than enough current assets to pay off those current liabilities. They have about $8.5 billion of cash and cash equivalents alone, which is almost enough to pay off the current liabilities on its own without the rest of these current assets. And then looking at total assets, around $40 billion there, which again is up 7% year over year, which is definitely good to see. And then looking at total liabilities, those are around $25 billion, which is I think pretty much steady with where it was last year. There's no listing for total liabilities, but it lists shareholder equity around $15 billion, which if you subtract that from the total liabilities and shareholder equity, that gives you about $25 billion, and we see a similar figure last year. So total liabilities around $25 billion. If we want to dig into that a little bit more, we can see long-term debt is around $8.9 billion, and then they have about $500 million of, that's the wrong one. Yeah, right here is the current portion of long-term debt, which is about $500 million. So in total, their total debt is around $9.5 billion. And if we compare that to their shareholders' equity of $15.3 billion, that gives us a debt to equity ratio of right around 0.6, which is really great to see that below 1, meaning they are financing more of their business through equity rather than debt. And debt is really not an issue at all for Nike, because if we look at the net debt, we can see, their, like I said, their total debt is around $9.5 billion, and their total cash is around $8.5 billion. So their net debt is really only about $1 billion or less, which is really awesome to see. And I think overall, the balance sheet is really strong because of the high levels of cash and low levels of debt in general compared to the equity as well. So I think that is a super strong sign for Nike. So next, looking at the dividends, this is just a screenshot of the dividend summary from Seeking Alpha. So their current yield is just over 1%. So in terms of a dividend paying company, that's fairly low, but they do have a very low payout ratio as well, around 30%, which means, they have a lot of room to grow the dividend. Like I said, the annual earnings per share is around $3.75. So compared to the annual dividend currently of $1.22, you can see that dividend is very well covered by the earnings. They have been growing the dividend for 20 years, which is a pretty solid length of time, getting close to being an aristocrat, which is awesome. And over the past 5 years, they've grown the dividend about 11% per year, which is a super awesome rate, and I would love to see that continue. You saw in 2021, as they said, they grew the dividend, or I guess fiscal year 2022, they grew the dividend by 12%. So that's pretty much right in line with that 5-year growth rate there. And looking a little bit more into the valuation, we can see this is the PE ratio over time since about the beginning of 2010, so about 12 years there. So in general, it's been increasing a little bit over the past 5 years or so. Right now, it's at 36.4, which is not too terrible, but I would say, considering the amount of correction we've seen in the market recently, I would definitely have liked to see that a lot lower. So this red line right here is the average. So their average over this 12-year time frame is about 30 or 31. So they're definitely above that a little bit. So I think for me, it doesn't seem to make very much sense for the stock to be down 30% over the last year, and the PE ratio to still be above that 12-year average. Now, granted, that average is skewed upward a little bit by these times here in 2019 and 2021, where they had significantly lower earnings for a short time period. So maybe if we took that out, it would look a little bit better. But I think in general, I would like to see the PE a lot lower for Nike, and I think that just shows that they're a little bit overvalued. And if we look at the earnings per share, you can see, it has been pretty steady growth, but the stock price over that same time period has been growing a lot more quickly, I guess is the point. And if we compare the PE ratio of Nike to their overall sector, they're in the consumer discretionary or consumer cyclical sector, which has an average right now PE ratio of around 12. And then within that sector, they're in the apparel and accessories industry, and that industry has an average PE of around 11. So Nike's PE is around 3 times that of their sector and industry peers. So that's definitely concerning, and again points to the fact that they're a little bit overvalued. And when we look at another valuation metric, such as a discounted cash flow model, we get a similar picture. So when I did the calculation, I got a fair value of around $67, and with a 10% margin of safety, this gives us a buy price of around $61, which is drastically below the current price of $108. So again, this points to them being overvalued. And the one thing I wanted to note here is these numbers are over a year old. And the reason for that is because they are from fiscal year 2021. Fiscal year 2022 has ended, but unfortunately we don't have the free cash flow data yet. So they released, the revenue and net income data in the, 2022 fiscal year 2022 Q4 earnings report that we just looked at. So we can get that net income and revenue data, but they didn't publish the free cash flow data, and so it's not really available anywhere, and so we can't use that at all to estimate future free cash flows from the year 2022. So we had to basically go a year in the past, which makes our model a little bit less accurate, but I think the general picture is still the same, that from this DCF perspective, Nike is overvalued at this point. So next, looking from a technical perspective, this is a chart of Nike stock over the past 10 years, and they have sort of a nice support line here, which they touched back at the end of 2017, and then they touched it again during the March 2020 crash. So I think that's pretty good support there. And right now it's around, $75, $75. So, they have a decent bit to fall before they get closer to that support. But another thing to notice as well is their pre-pandemic highs were right around $105, and the current price, is right around 107. They went a little bit below 107 in the past, few days or weeks, I think. So they're pretty much right back to their pre-pandemic highs, which is definitely a good sign in general for the stock. And if you look at this drop from the highs in November-ish, they're down about 30% year to date. And over the 1 year time frame, they're down about 36%, which is a lot more than the overall market is down. I think the S&P 500 is down maybe 10% over the past year, whereas Nike's down, almost 36%. So definitely a little bit more beaten up than the overall market. And if we zoom in here to the 1 year chart, we can see that a little bit better. So they kind of peaked back here in November, but even, back in July of last year, they were pretty close to their peaks. And, again, down about 36% since then, which is pretty significant compared to the overall market, like I was saying. So that kind of looks, I guess, a little bit better for them than the other valuation metrics show. But they do have a fair bit of support in the $100 range. And if we actually zoom out here wrong button here. If we zoom out here to the 3 year time frame, we can see they do have a lot of volume right here in this 90 to 100 range, right in here. So if I had to guess, I would say, they probably won't be dropping a whole lot more, even if we see more pressure on the market. And that's just because of this volume here that they have at the $90 to $100 range. So overall, I think technically they don't look too terrible, and it could be a time to kind of consolidate in this $100 area, or maybe start to bounce up off this 105 level here. So in summary, I do think Nike is a great company. They've been steadily growing their revenues and earnings over the past few years and decades, and I'm sure that will continue to happen in the future. And another thing that is a strong point for Nike as well is their consumer base and strong brand loyalty. So in 2021, they were ranked number 10 on the list of, brands with the most customer loyalty. So that's pretty solid, and I think that speaks to their brand loyalty and business in general. One of the, I guess, concerns I might have is that their products are generally not the cheapest, I guess. So I wouldn't really classify them as luxury, but they're in general high-end sportswear, and so that could definitely hurt them a bit if money becomes more tight for people. If we go into a bit more of a recession, I think that could definitely hurt them, as people just won't have as much money to spend on their products. But again, that's more of like a short-term issue. That's not really a long-term issue for their business and business model, I think. But I think it's something to keep in mind. They do have a very strong balance sheet, like I was saying, pretty much almost enough cash on hand to pay off all their debt right now, which is pretty cool to see. They do have a pretty nice dividend history with a generally low yield, but that gives them a super low payout ratio, which really allows them some room to grow the dividend, and they have been growing the dividend pretty quickly, around 11% per year. But unfortunately, I think they are a bit overvalued right now. When we look at the things like the PE ratio and discounted cash flow model, even though they are down, 36% year over year compared to 10% on the SPY, I think they are still a bit overvalued, and I think the price is just too high for me to be buying. I definitely think it's a good company, and a good company to own at the right price. But at this point, $105, $108 is just too high of a price for me. But I would love to hear your guys' thoughts down in the comments below. If you do own Nike, or if you are interested in buying it, at what price are you looking at? Would definitely be interested to hear what everyone has to say. Just want to thank you all for sticking around to the end of the video, and I'll see you all in the next one.